Hey, what's going on YouTube? Welcome back. It's Travis here with JT Wealth. I'm really excited about today's video. Today, I'm going to show you guys how to give yourself a raise. I mean that literally, how to boost your income every quarter so that you can help increase your income stream or just your portfolio. And yes, we're going to do that with 3 high-paying dividend stocks up to 10.4% yield. Now, this is so important because the cost of items has far outpaced the increase of wages the American people have seen in the 21st century. And unfortunately, 40% of Americans spend more money every year than they make. That means if we use the estimated working population of America of 200 million people, 80 million people are spending more money every year than they earn. Just to show you guys what I'm talking about, let's take a look at a couple graphs. Here you can see the costs outpace wages in 21st century based on numbers inflation adjusted for the 2021 dollar. You're looking at the healthcare, college, and housing prices compared to your wage increases from the year 2000 up to now. We've seen maybe a 7% increase in the total wages, but nothing less than 25% for housing, and then 55 to 60+% for college or healthcare. It's just not feasible for the average person to keep up with these costs. Not when so many people are spending more money every year than they make, which really means they're putting it all into loans or credit cards. This chart is really scary, guys. How much Americans make and spend, green being your annual income after taxes, and red being the average annual expenditures. You can see that both the bottom 20 and second 20% of American employees making money here in the US are spending more than they make. It barely breaks even with the middle 20% actually spending a little bit less than they make. And then when you get to the top 20 and the fourth 20%, they're actually doing okay. But even those numbers aren't great. Look at that fourth 20%. They're not the top, but they're still only making a little bit more than they're spending. But I'm not going to adapt to the mentality of some people that, hey, you just need to stop buying coffee or stop buying the things that you enjoy on a day-to-day basis, because that's really going to decline the quality of life that you do have while you're already dealing with this issue of not having enough money to begin with. So instead of telling people what they should and shouldn't spend their money on, let's help them make more money. And you can do that with income-paying stocks, aka dividend stocks paying out every month or every quarter depending on which one you choose to invest in. Now, the stock market has been on quite a rally recently, which has actually led to the appearance of dividend yields being lower. Now, the yield is in fact lower because the price of the stock is higher, but that doesn't mean you're receiving any less money per quarter. Look at this chart. This is just the dividend yield formula, right? If you're trying to achieve a dividend yield, you take the annual dividends per share, like if a stock pays out $2 per share annually, and then you divide it by the current share price and multiply that by 100. In the event the current share price rises, your dividend yield will decrease, but that doesn't mean you're receiving less shares or less dividends per share. So now let's look at these 3 dividend-paying stocks that you can use and start tomorrow, right away, to start increasing your income so you can stay up to pace, make sure you're paying your bills, get everything taken care of, and if you're finally there, say you're at zero, you have no debt at all, you can start increasing your net worth, which is the overall goal here, right? We all want to make more money. So let's take a look at these 3 stocks. I saved the best for last. The last stock I'm going to talk about has a 10.4% dividend yield and it trades under $10. So here we go. All right, the first stock on our list is JP Morgan Chase, a bank stock. And with inflation running hot, everybody's always worried about interest rate hikes, but as it turns out, banks do really well with rising interest rate environments. JP Morgan Chase is the largest US bank with a whopping $3.8 trillion in assets. This stock won a lot of investor attention, gaining 70% over the last year, and business has improved a lot since the pandemic's early days in 2020. In the third quarter of 2021, JP Morgan produced $3.74 per share in earnings, marking a 28% increase from the $2.92 per share earned in the year ago period. And in June, the bank announced an 11% increase to its quarterly dividend rate to $1 per share. Here you can see the tip ranks chart showing JP Morgan Chase a moderate buy with 12 ratings a $168 current price tag, but a almost 4% upside in the next 12 months. JP Morgan also yields 2.3% higher than what's offered at either Goldman Sachs, Bank of America, or Wells Fargo, but is admittedly just below Morgan Stanley. Now, while JP Morgan shares trade at over $170 a piece, you can get a slice of the bank using a popular stock trading app that'll allow you to buy just fractional shares, so you don't need to spend so much money to get involved with a great dividend payer like JP Morgan Chase. Number 2 on our list, Walgreens, which is ticker symbol WBA, or Walgreens Boots Alliance. And we talked about the stock market rising, but not every stock has gone up. Walgreens, for instance, has tumbled more than 40% in the last 5 years combined. But dividends, on the other hand, have only increased. In July, Walgreens boosted its quarterly payout by 2.1% to about 48 cents per share, marking its 48th consecutive annual dividend increase. Looking further back, you'll see that the retail pharmacy giant has paid uninterrupted dividends for more than 88 years, making Walgreens Boots Alliance a dividend king. Trading at about $50, it does have an over 11% potential upside in the next 12 months. And Walgreens has a growing business to back its rising dividends. In the 3 months ending August 31st, sales from continuing operations rose 12.8% year over year to $34.3 billion. Meanwhile, adjusted earnings per share grew 29.5% to $1.17. Today, Walgreens yields 4.1% as its dividend yield, and that's a generous amount compared to competitors like CVS, it's only 2.2%, or Walmart at only 1.5%. So Walgreens is giving you the ability to possibly get an 11% increase in the stock price this year, while also getting over 4% dividend payouts every single quarter just for owning the stock, regardless of what happens to the price. And like I said, I saved the best for last. You're gonna love this one, guys. Check it out. Annaly Capital Management, ticker symbol NLY. For the real yield hunters, this one deserves a look. This company's not nearly as well known as the ones we've talked about previously, but it offers a staggering yield of 10.4%. Now, it is structured as a real estate investment trust, or a REIT. And you know, guys, we love talking about REITs. We are heavily invested in REITs. Annaly is a diversified capital manager, and this REIT invests in agency mortgage-backed securities, residential real estate, and middle market lending. Shares did tumble more than 50% during the pandemic-induced market crash early last year, but since then, Annaly has made a strong recovery, and the stock is almost back to where it was before. Here you can see on the TipRanks chart, it's trading at about $8.70. It does get a hold rating, no real profit to be made according to the analysts in the next 12 months as far as stock appreciation goes, but you're still getting that 10.4% yield every single quarter. Now, the last earnings report for this REIT was last week, I believe, and it was in the third quarter. Their earnings were available for distribution, and they came in at 28 cents per share, which covered its dividend 1.3 times. They are in no short supply of money to cover these dividends. And in the earnings conference call, the chief investment officer and CEO said, "We feel good about where earnings are this quarter, and we feel good about covering the dividend into 2022, certainly." So there you have it, guys. Those are the 3 companies we're talking about today, quarterly paying high dividends with potential for upside in the next 12 months for at least 2 out of 3. But that third one has 10.4% dividend yield, which means you're making a really good return on your investment for buying a stock under $10 and letting it make money for you. And I know a couple sayings that fit this fairly well. And the first is that you don't know what you don't know. And the second is people always say that you need to make smart choices. Well, you need to have smart choices to make. And that falls right back to knowing what you know and what you don't know. If you didn't know about dividend investing, well, maybe now you do. And now you can take what you've learned and apply it to bettering your life in some meaningful way, even if it takes a little bit, right? Start today. It's the absolute best day to start investing. Yesterday would have been better, but we'll settle for today, guys. Anyways, thanks so much for checking out today's video. Hopefully you found some value in it. And if you did, don't forget, smash that like button for me. Consider subscribing to the channel so I can keep bringing you guys content like this, and maybe drop that 80 million people down to a more reasonable number. Until next time, guys, bottoms up.